So yesterday, there was about an 86% chance among experts polled that the Fed would increase rates by 25 basis points. And they did just that. The unanimous decision by all of the 18 members of the Fed puts the key benchmark federal funds rate in a range of 4.75 to 5%. This is the highest it's been since 2007. So it's up to that range from near zero just a year ago. So it marks the 9th consecutive rate increase, and they are using all of their blunt tools to try to combat inflation. I think it was a mistake, as there is reliable data indicating a softening labor market. If you compare the private market numbers to the government numbers, which are a little bit archaic in how they are generated. There is a much softer housing market. You heard me talk about housing prices, actually the median housing price coming down for the first time in 11 years, I think it is. And other indicators suggesting that the economy is weakening at a pretty decent pace. So GDP measures the gross domestic output of a country and basically how fast the economy of a country is growing. So the GDP has gone from right over 5% post-COVID. Okay, so remember, we shut down the economy and then we flipped the switch back on. So the 5% post-COVID growth rate was really an anomaly. The GDP rate from last year, which was just 2.1%. The projections for 2023 are pretty grim, but they're still barely positive according to most forecasters. So, you hear a lot of talk about, well, we have a soft landing, well, we have a hard landing because of what the Fed's doing. They're trying to slow down the economy and get inflation back in the barn. I can't see GDP being positive considering the direction that we're going. So, in addition to the 25 basis point rate increase that the Fed did yesterday, I think the effects of that are going to be multiplied by what's happening in the banking industry, because we're going to start to see lending get really, really tight, which stifles growth in the economy. So the Fed's very loose projection that unemployment should increase by 1.1% by year end puts us technically into a recession, according to one economic school of thought, although you had to really read between the lines to glean that information. But he stuck to his line about a soft landing still being a possibility, done to instill confidence in the public. Now, anything is possible, but not everything is probable. And I don't think that I think the soft landing is becoming less and less probable. My confidence is waning greatly that there will be a soft landing. They did signal that they will be data dependent, watching the numbers again, and that they will adjust as soon as the data justifies a reversal. So I think inflation will be lower by the end of the year, but they're not getting it back to 2% without severely breaking something.